Hi, it's Mark Lloyd here from Property Master Academy. A little bit early, so we'll wait for people to log on. But just as a quick sound check, if you are able to hear me okay, if you could type into the chat box, just so I know, that'd be great. Okay, great. I can see a few of you. Hi, Kathy. Lorna. Hello, Lorna. Nicholas, Vicky. Okay, cool. Hi, Chris. Glad you can make it. Look forward to seeing you in a couple of weeks. So, Chris, this is the presentation that you missed out on. I think Hannah probably saw this when she came to the show. So it'll be perhaps help you catch up a little bit. Okay, so during the course of the webinar, if you've got any questions, just post them as and when they come into your mind, into the chat box, and I'll either answer them there and then or wait until the end. So we'll just give a few minutes for the late arrivals. I'm always amazed when you say start time and the number of people that arrive 10 minutes late. But anyway, thank you for being on time, those of you who are there. And I'll start in a couple of minutes. Good to see a few fresh names on there. Hope you're well, Lorna. Good to see you again. Kathy, Chris. Okay, cool. Okay, I mean, we'll make a start, and then obviously those that are a bit late are obviously a bit late. So anyway, as it says, and you obviously saw either the email or the marketing on Facebook or social media, LinkedIn, and so on. An introduction to property investing, and this is just aimed at those of you that are essentially new to property investing, or maybe have your first couple of properties, just to kind of put it into perspective. If you're a bit more experienced than that, to be honest with you, you're probably going to waste the next hour. So entirely up to you if you want to stay on, but it's aimed primarily at those of you who are new, and there should be some useful information on here for you. So let's kick off. Okay, let's didn't work. Right, just introduce first of all the team. So the team at Property Master Academy. For those of you who've not met me before, I'm the grey-haired chap on the right. That's me, Mark Lloyd. Been an investor now for, I think it's about 15 years, something like that. Bought my very first property was overseas, first UK buy-to-let, around about this sort of time. Been full-time in property now for over 10 years. Have run businesses for over 30 years in various different industries. In fact, the business prior to going full-time in property was a telecommunications company. So absolutely nothing to do with property. So I've kind of proved the case that you do not have to have knowledge of property industry to actually be successful in it. In the middle is one of my long-term business partners, Jackie Reeves. I've been business partners with Jackie now for, it must be something like 27 of the 30 odd years I've been in business. And we've set up and run a number of companies together. Jackie is by far, I would say, and I'd say this if she was on the line too, the best coach we have in between the three of us. As you'll find out if you come and work with us, and those of you coming on the 2-day will find out too. And then on the left of the screen, Peter Licorinas. Peter has been in the industry far longer than myself and Jackie. I think it's over 23 years now. He had his own estate agency, which he sold a few years back now, and decided to become fully involved in purely the investing side, and runs an extremely successful sourcing business, probably one of the largest ones in the UK, where he focuses his special knowledge on HMOs. Between us, we own or control round about 100 properties, give or take a few. And I don't say that to kind of impress you, but just really to show, look, we've done quite a lot of deals. I think between us, apart from owning that number of properties, we have done close to 1,000 deals. So, and in that, you obviously get experience, and that's what I'm really talking about tonight. We're talking from a head of experience rather than someone that just started yesterday or started a year or two ago. I've seen just recently a number of people springing up, offering training that literally have 2 properties, or they learned last year and thought they can teach everybody this year, and they may be able to teach a certain number of things. I'm not going to knock that too much, but just say that we're relatively experienced, and like to think we have come across most kind of situations you're likely to come across. So if you've not listened to a webinar before, 2 things. 1, ask questions. You found out where the chat box is, and if you're a late arrival, just find where the chat box is, and or questions, just stick any questions you want to do in there as we go along, and I'll try and answer them, and take notes. I have recorded this webinar, but sometimes the recordings don't always come out too well, so just take notes anyway. And I think it's always a good idea to take notes because you will take things in that much better. So first question really want to ask is, which are you, landlord or investor? Now I know technically speaking they're one and the same, but this is more of a mindset thing. It's more how do you view yourself? See, when I first started in property, I never ever wanted to be a landlord. The whole thought of having to manage tenants, deal with tenants, just was not of any interest to me whatsoever. But that may be of interest to you. So there's no right or wrong answer here as to which category you fall into. But let me just share with you what I consider to be the traits of each one. So if we start with the landlord, one trait is, generally speaking, they like a lot of control. And there's nothing wrong with that. Any business owner wants to have control of their business. So I'm not saying there's anything wrong with that, but they tend to have quite tight control. Often means that they will restrict themselves to local investing. Again, absolutely nothing wrong with that. And in many circles, that's considered to be the best way to go anyway. And I would always suggest it. If you can invest within your local area, most definitely you should, because your knowledge is in your local area. They probably also self-manage because they don't trust people to do things properly, and hence the control issue. So they will often manage their own properties, look after the tenants. They'll often do some of the repairs themselves. And the way I viewed this side of the slide, if you like, the landlord slide, to me that was just another job. So hence why I never really wanted to get involved. I thought, right, there's people out there that do this for a living, that are called letting agents. They manage properties, and I appreciate there's not all good letting agents out there, but you've got to find the good ones, and there are some really good ones out there. Now, if we look at the investor side of the quadrant, which is where I sit quite firmly, firstly, I start with analysis, and investing is very much looking at the returns initially. The returns don't tell you the full story, obviously, but that's where you've got to start somewhere. And starting the first point of call is to start with analysis. So look at the figures. Do the numbers stack up whilst whilst you check out the rest of the deal? So that's always my first port of call. The second thing is that potentially I could invest anywhere because I create what I call a cookie cutter system. So I will buy a property in an area, and I'll tell you exactly where I started. I started buying properties in Hull, which happens to be 300 miles from where I live. Now, why did I do that? Well, there was two things. I live, or at the time I was living just outside Farnham in Surrey, an extremely expensive area. A kind of a 2-bed property at the time. We're talking about 10 years ago now. It was probably about £250,000, 250 to 300. And I could buy 5 of those properties in Hull. So from a de-risking perspective, I could have more properties with a higher rental, higher cash flow overall than having one property. So from a risk perspective, it was kind of stacked up. The second issue was actually my mentor at the time said we should invest in the north. Now, I don't necessarily agree with that, although I have done. I think it's down to personal preference. So that's how we started. So we invested in the north. We have a reasonable sized portfolio in the Humberside area. We then looked for another cash flow opportunity, and that happened to be in Scotland. So we have a high yielding portfolio in Scotland that yields between 12 and 14%. Doesn't get much in the way of growth, but I've got a bit of an eye opener for you. Capital growth doesn't pay the bills. Cash flow does. And if you're looking to invest on the basis of capital growth, that is the wrong reason. Capital growth is a byproduct of two things. One, economic activity. Two, demand. Now, we are lucky in the UK being on an island, and we have a shortage of supply of our product, the house. So tenant demand is there. And there's those two factors which help create capital growth. But don't expect capital growth just to happen. It doesn't. So, when you're starting out, my view is, first of all, look at cash flow. Satisfy your cash flow first before you start to look at something more, what I would call more interesting, where there are opportunities for capital growth. So anyway, hence the invest. You could potentially invest anywhere. I'm not saying like a scattergun approach. I'm not saying like one house in Guildford, one house in Manchester, one house in Leeds, one house in Cardiff. I'm not saying that. If you do decide to invest in an area that's not local to you, then I would suggest you invest in clusters rather than just the odd one property. And then lastly, an investor, as like a business owner, delegates. So we have quite a large power team behind what we do. Obviously, one member of that team is a letting agent. In fact, we have 2 main letting agents. We have one who is an agent in Hull, and in Scotland we actually employ our own lettings manager because of the size of the portfolio that we have there. In the south, so we have a portfolio in Surrey, Hants and Berkshire, where we have yet another letting agent that manages those properties. And the properties in the Surrey, Hants, Berks were built for 2 reasons. One, more potential for capital growth, but we still buy them on the basis that the cash flow works as well. So it's not just one buying it for capital growth, it's got to be satisfied on the cash flow angle as well. So that kind of gives you an idea. And as I said, it doesn't matter which side of the screen you sit, you just need to know which one you are, because it really will help you when you're moving forward. Hi, Kathy. Just seen your question. You want to invest your capital and rent to earn money while you sleep. Well, that can be done. Okay, this is really what investing is about. It's about looking at the returns and how you can be as relatively hands-off as possible. And it can certainly be done in property, and I'll share with you some of those details. Okay, so what do you need to be successful in property? Well, I think there are 5 things, 5 main things. First of all, understanding strategies. Now, there are a lot of strategies out there. Okay, I'm going to touch on a few of them in a second. But on our 2-day masterclass, we cover what we call the kind of basic 12 strategies. But I can tell you one of those strategies alone has another 50 strategies attached to it. So there are a lot of things that if you want to, you can learn. My view is that the more you learn, the more opportunities you get to understand. The second thing is financing. Clearly, money is needed in property. And if you've heard anybody that says you don't need money, I'm sorry, they're lying. You need money. It doesn't necessarily have to be your money. I will add that as a note, but you need money. And it's very handy if you can start with money. Obviously, it gives you a big start in the industry. They need to understand legal structures, which I'll touch on. Obviously, deals. So it's all right understanding these things, but if you don't know how to find deals, then you're not going to get anywhere. And lastly, probably the most important one is your reason, which we'll touch on towards the end. So, understanding strategies. There are a lot of strategies. Here's just a few of them. So, just in case you're not familiar with what the abbreviations are, so BTL is buy to let. That's the foundation of the buy to let industry, the property investing industry. Traditionally, that's been the mainstay of the whole property investing world. And your average buy to let is a 2 up, 2 down, or 3-bed, 2/3-bed property, family orientated. Those are the standard kinds of buy to let properties. HMO stands for houses of multiple occupancy. So if you're not too sure what that is, it's renting by the room. Think of student accommodation. That's an example, one example of an HMO. R2R is rent to rent, a particular strategy which I'll share with you, one example of that, but essentially where you're renting somewhere and then re-renting it back out to make a margin. LO stands for lease options, probably one of the most exciting strategies out there, very misunderstood. That is the one I mentioned that has another 50 strategies attached to it. Sourcing. Sourcing is finding properties for other investors. Now, you might wonder, why on earth would you want to do that? Well, if you come to work with us and you follow what we teach, you will find more properties than you can actually handle. Now, that may seem like pie in the sky at the moment if you're just starting out, and it was to me when I first started out. But when we first started, we did exactly as we were told, and for a period of time, nothing actually happens because, I'm sure you appreciate, property is not a get-rich-quick scheme. It's one of those things that takes a little while. So when you put an offer in on a property, by the time you actually complete it, you're probably a couple of months down the road. So there's quite a big lead-in time. And we did everything we were told, and then suddenly we started getting all these offers accepted. And I think at one point we had 6 offers accepted, and I was quite keen to do them all. But because I don't get involved in anything else once the deal is done, that's kind of when Jackie takes over. So I wasn't too concerned, but she was, because whoa, we can't manage 6 refurbs at the time because we were brand new. Now nowadays we could do it quite easily, but at the time we just said, no way we can manage 6 refurbs and all the financing and everything associated to it. So we decided to keep half of them. We kept 3. And thought, what do we do with the other 3? And I was just talking to some other investors, and they offered to buy them off us. And at the time, I'd never sourced anything before, and I said, okay. And I just thought of a figure for a fee. I said, well, okay, I'll tell you what, how much if I charge you X? And that's how we started sourcing. So, you will, if you follow the systems properly, you will find more properties than you can actually deal with. And there'll be opportunities that also perhaps don't fit your criteria, that may be suitable for somebody else. And if you found them, why not monetize the time that you've actually spent finding it and researching it, working out the figures, and so on. Buy to sell, that kind of almost speaks for itself. What I'm talking about here is buying a property that needs some refurbishment. So a bit of money, adding some value, and then selling it on. Trading is a kind of twist on buy to sell. Trading is just buying and selling. There's no refurbishment. There's no money spent on the property. It's literally buy it in one market, sell it in another market, and make a margin. And there are some very successful property traders in the UK today that make an absolute fortune, but it's a very high risk strategy. Leasehold, freehold. Leasehold, freehold. So leasehold, a lot of you will be aware of flats. Most flats nowadays are leasehold, or you can get freehold flats. There's opportunities there in the next section, which is short leases, because once a lease is below 70 years, it's very difficult for someone to get a mortgage on it. But with a little bit of knowledge, you can actually make money on that transaction. The leasehold freehold element is where a property has been split. So if you can imagine a house that's been split into 4 flats, but the titles have not been changed. Now, don't worry if it's a little bit confusing. Okay, I'm not going to go into much detail tonight, because if you are new, this might be a little bit confusing. But we will explain more if you decide to come on our introductory course. Development, property development speaks for itself. I'm really talking about new builds there. As a new investor, not impossible for you to do straight away, but very hard. Commercial property is probably one of the most misunderstood aspects of property investing overall, and that's why you tend to find it's only the more experienced investors that invest in commercial property. But I can tell you now, one of our mentees who lives in Manchester decided to start on commercial, and he already has, I think it's 2 or 3 commercial properties under his belt. There are many advantages of commercial property that over residential, but there is a higher risk element with commercial. And lastly, land assembly. Land assembly is taking land that currently has no value, packaging it with other plots of land that also have no value or very minimal value, and creating value by getting planning permission. Okay, it's a strategy we teach, not very well known, but it can actually create 6-figure sums from each deal. So it's can be quite popular, but it is hard work. So those are kind of the basic, what we call the kind of basic kind of strategies that we tend to cover. So if we look at these in terms of an income and capital strategy, so income, most definitely buy to let. Now buy to lets, if you're living in the south of the country, don't work as well anymore. The yields are really, really low, and trying to make much of a profit out of them is quite hard. Not impossible. Every area is different. I would suggest in London it's really, really hard to actually create it as an income strategy. So, but it does produce a yield. Obviously, HMOs, houses of multiple occupancy, are very popular with investors. I would add a word of caution with HMOs. HMOs have been around for some time now, been very popular probably for the past, I would say, 5 or 6 years, really popular. A lot of investors have piled into them to such a degree that in some areas now there are too many HMOs. There's saturation. So it's something you need to look out for. There are ways of dealing with that, and I can go into a lot more depth on that another time. But just to be wary. If HMOs are something you're looking at as a potential strategy, do your research. Thirdly, we've got lease options. That's a way of controlling a property without buying it. And I've got I think I've got an example of one of those a bit later on. So I'll talk about that then. Rent to rent, again, is another income strategy. And there are, within rent to rent, 4 main rent to rent strategies, which can apply. They obviously produce an income without you owning the property. Sourcing, I've just mentioned. Out of all of these, the sourcing is the odd one out because it's not a passive income. Sourcing is an active income. So buy to lets, you buy the property, refurb it, put a tenant in it. It's essentially, for all intents and purposes, passive. HMOs, as long as you've got someone else managing them, again, should be potentially passive. Lease options the same. Rent to rent can be. Sourcing most definitely is not passive. You've got to be active. You've got to be out there finding deals. And lastly, commercial. Commercial is most definitely passive. Out of all of them, the most passive of all, in fact. So if we look at the what can produce capital sums, well, clearly flipping, buy to sell, the buying, refurbishing, and selling, that's going to give you a nice capital lump sum. Trading, I mentioned, which is also just buying and selling. Development, freehold, leasehold, short leases. Commercial will also produce a lump sum, and land assembly. And really, when you're looking at starting out, first of all, focus on one strategy. Don't try and do everything. Okay, have knowledge of more than one, definitely, but try and focus on one strategy. So that in my opinion should be an income strategy. As I said, satisfy your cash flow first. A lot of you, I'm sure, are either in jobs or maybe running a business or an extra income. So it's the income side that comes first. That should be probably your main focus to begin with. But you might, at the side of it, want to run a secondary strategy, and that might be, let's say, land assembly or flipping as a secondary strategy, which you can run alongside that will produce a capital sum. Let's say from starting point, 6 to 9 months down the road, will produce a lump sum into your bank account, which helps bolster your resources, helps build your pot again, to help you buy more properties or buy that car, whatever you want to do. Okay, so those are kind of the main strategies. Next, financing. Now, financing, you don't have to be an expert in financing. You need to have a basic understanding, because there are obviously really good people out there called brokers that can find this stuff for you. But you need to have a little bit of an inkling of what you're actually looking for. So again, brokers come into many, many different categories. There are some that just focus on buy-to-let. There are some that just focus on commercial lending. There are some that do both, and there are some that do all sorts of fancy things. So what types of mortgages are there? Well, the two main types are buy-to-let and commercial. Don't be confused by the term commercial, by the way, because you can buy residential property with a commercial mortgage. Okay, it's just a different terminology, and different regulations apply. So buy-to-let, to get a buy-to-let mortgage, there's certain criteria you need to satisfy. Now, they change every now and then, and not all lenders abide by them, and so on. So, but in general, you need to be working. You need to have a salary of £25,000 plus. You need to own your own home. They're kind of main ones. There are some variances to that, and if you don't tick one of those boxes, then you don't get the mortgage. It's as simple as that. If you have any bad credit, you won't get the mortgage. So the buy-to-let mortgage system is very much a tick box. You find the property, you approach your broker, sort out a particular mortgage lender. They will send out a surveyor, and then if you're lucky, they'll offer you a mortgage. Commercial is a little bit more flexible. They will look at many different things. They'll look at all types of property: residential, commercial, semi-commercial, all those kind of things. Rates are slightly more than buy-to-let, but the product itself is a lot more flexible. They will take into account, for example, if there is any bad credit, as long as you can explain it. They will also look at, for example, myself, professional landlords. Buy-to-let mortgages don't really apply to me anymore. Commercial lending is really the way where I'm at, because they'll look at rental income, whereas buy-to-lets will not look at your rental income. Then there's something called a facility. Now, with mortgages, as I said, the process is you find the property, instruct the surveyor, the lender then comes back with an offer. With a facility, you go to the bank first, ask them for money, and then you go and find the properties. You've got to decide which way you want to go. Now, a facility is not a straightforward thing to get. If you're an experienced investor, certainly got a few properties, it's much easier. And if you have some business experience, or currently run a business or run businesses in the past, then getting a facility is also a little bit easier as well. There is sorry, I meant to put on another couple on there. So I'll go back a slide a second. So there is something else called bridging. Bridging is short-term finance, designed really for things like flipping. So buy, refurbish, and sell really should be done on something like a bridging product. And of course, there's things like crowdfunding, which are becoming more and more popular for a way of raising money. Okay, so understanding legal structures. There are a number of different legal structures, and I'm not here to tell you which you should use. This is a discussion you need to have with your accountant as to how you structure yourself, or a good tax advisor. But there are sole trader partnership, limited company, limited liability partnership, control versus ownership. Now I can tell you we have all of these. Some in our sole name historically before some of the legislation changed. It was more tax efficient to buy in your sole name. We have some in partnership, and we have some in limited company. We don't at the moment have any in LLP, but that's something we are looking at. And then really down the bottom here, a lot of investors get hung up on owning properties. Don't. If you read or have read Robert Kiyosaki's book Rich Dad Poor Dad, he talks very much about control everything and own nothing. Because if you can control something, so a controlling strategy like lease options, like rent to rent, like some of the others, you're making money out of it, but without actually owning it. So you're de-risking quite substantially. So bear that in mind, because controlling is just as good as ownership, and sometimes maybe better, and sometimes not necessarily so. Understanding how to find deals. Yep, you can go to an estate agent, but here's a few other ones. Administrators. I don't know many investors that go to administrators. What's an administrator? An administrator is when someone has their house repossessed or goes bankrupt, an administrator or liquidator is appointed. Okay, so that's really what an administrator is. Now, an administrator's job is to get in the assets and sell them for good value to pay off the debts. That's their job. And often they'll come across situations which are not something they can just put in an estate agent's window. An odd property, or certainly this applies to commercial, and things like HMOs, for example, are not things that most estate agents will sell. So an administrator can be a very good source for deals, but you have got to move quickly, and you've often got to be a cash buyer. Then you've got auctions. Auctions can be quite popular. I'd be wary of auctions personally. The auctioneer's job is to hype up the room, to get the emotion in the room going. And you'll never go to an auction where it's just investors. There's always going to be what I would call retail buyers, your average person just looking to get a deal for themselves, a home to live in that they can do up on their own, and they'll pay well over the odds. They'll outbid you every single time, as will a local builder who's looking just for his next project. He's looking for something to buy. He can get his team on to build it and then sell it on. So he will outbid you because he doesn't need to make as much a profit as you will do, where you need to make a profit as well as paying the builder. So auctions, bear that in mind. What does work at auctions is post-auction, where a property is not sold. That's a good time to perhaps consider looking at. Again, you've got to move relatively quickly. It's still under auction conditions, which means once an offer is agreed, you have got to complete within a certain period of time. Now, don't assume that an auction is 28 days from agreement. It's not. It can be, but it can also be as little as 14 days. It can be 6 weeks. You need to read the auction terms and conditions for that particular plot. Estate agents. Now, estate agents, the main reason I've included them in here because they control something like 95% of the market. So 95% of houses are sold through estate agents. Not the same in the commercial market, by the way. But if you look at the residential market, 95% of the deals are sold there. So learning how to deal with estate agents is quite key. And we're really lucky having Peter on as part of the team here, because previously having his own estate agency, obviously he knows all the kind of things to get deals early from estate agents before they go on the market. But the question I'd ask is this: what's an estate agent's job? An estate agent's job is to sell the house for the vendor at the best price. Why? Because they get a commission. The more the house is sold for, the higher the commission they make. But what's your job? You want to pay as least for the house as possible. So there is a conflict there, isn't there? The estate agent wants to sell for the most, you want to buy for the least. So trying to deal with estate agents does take a particular skill. It's not one of mine. I don't tend to deal with estate agents. I deal with more off-market stuff. But Peter gets 90% of his deals through estate agents. So it's understanding how to deal with them, and it does take a particular skill for them to wake up and pay attention to you. And when we last did an exercise on this, we found over 32 different ways of finding deals. Okay, so don't just rely, if it's just starting out, you probably will start with estate agents. Most people do, but don't just rely on it. You've got to think outside the box. You've got to think, okay, what other ways can I find properties? Okay, and a number of techniques we teach you that don't include any of this. Okay, totally out of the box. So just think of, right, how can I find deals where I'm not competing with loads of other people? Because the other downside of estate agents, of course, is once the house is on the market, if it's a good deal, you're going to be competing with not only investors but everybody else out there. Okay, so takes a particular technique, but look for off-market deals as well, and that's one of my kind of specialities. So that's kind of the basic stuff, but I thought I'd trying to keep it real and share with you some actual deals from students that we've worked with in the past. So the first one is in Guildford in Surrey. Okay, now this is a rent-to-rent deal. Okay, it's got through a letting agent. Again, as a particular way of dealing with them. So you can tell, obviously not purchased, minimal setup costs, but never look at the net cash flow. After all costs, £1,200 per month. So I don't know what you're earning at the moment, but how many of those do you actually need to replace your income? To actually make you think, oh, actually, that's equals my income now. I don't need to work. What a nice position to be in. Very minimal setup costs, but don't let that make it sound like it's easy to do. It isn't. And none of these are easy, by the way. All right, I don't want to give the impression that it's easy to make money, because if it was, guess what? Everybody would be doing it, wouldn't they? There's very few people that make a success of making money. These things are not easy, so bear that in mind. But this is bought by one of our, sorry, not bought by, but this was a deal done by one of our mentees, £1,200 net cash flow after all costs. This one was purchased, as you can see, through. So the first one was through a letting agent. This one's through an estate agent, and this was actually brought to me by someone who was sitting in an audience when I was speaking at a network meeting. I was talking about joint ventures, how they worked, and he came up to me afterwards and just said, "Look, I found this property. It's in Hull. Could I work with you on it?" I said, "Well, let's have a chat and sit down and so on." And anyway, he came to work with us. And we trained him, and you can see the figures. But he wanted to work with us on this particular deal, and from my perspective, we actually put no money in. He used his money to buy the property, used our skill and knowledge to do the refurbishment, get all the other things sorted, make sure it's a good deal. But the cash flow after costs, £1,000 per month. Now we split that 50-50. The profit on the house after the refurbishment, we also split 50-50. So, there are a number of different ways of making a deal work. And I remember I said at the very beginning, you need money in property. This is an example of someone else's money. Next one, this is in Bracknell, which is just outside Reading in the southeast. And this was through a sourcing agent. So that's 3 different routes now of finding properties. This is a property ex-local authority, which means they have quite large rooms, so they're ideal for converting to HMOs. You can see the figures there. Purchase price 286, refurb budget 40-odd thousand, but net cash flow after all costs £1,600 per month. So again, how many of those do you need? If you've got the money to put in for a deposit on an HMO, can vary. 25%, but you can get away with as little as 15% with one particular mortgage lender. So you can work out the maths from that. But that's one in the southeast that provides a pretty good cash flow for a property. Going on the other end of the country, now this is one of ours. This is quite a sad story, actually. distressed landlords and distressed portfolios. So again, a different source, distressed landlords. How did this come to us? Right, this came to us through somebody we know. Just rang us up one day and said, Mark, got this deal. It's no good for me. Do you know anybody that might be interested? I said, tell me what it is. I said, oh, well, sounds interesting. We might be interested. So that block of flats is ours. 38 residential properties, 1 commercial property, and a letting agency to boot, which we bought for the price of £750,000. Why did we buy it? Because it was worth 1.35 million. It was a kind of a no-brainer. The sad story about it is 2 guys. They'd kind of got caught a little bit by the last crash in 2008, 2009. They were with, I think it was Clydesdale Bank, and Clydesdale pulled the rug. Basically said, well, market's crashed and your portfolio is not worth as much as it was now. We want our money back. Of course, what can you do? The market's just crashed. You can't sell anything. So they struggled along. The bank took control of everything, took all the rental income. So they had no money to spend on the properties. When we went to view them, which was about, I think 6 years ago now, I think we've had this 6 years, they were so run down because they'd had no money spent on them. And one of the guys had an accident. He'd had a bad cycle accident. I'm not talking motorcycle, I'm talking about bicycle accident. But it was one of these avid cyclists that you see on the country lanes, bombing along 30 odd miles an hour. Well, he did that one day and his handlebars came off and he flew over the handlebars and broke his back. Not a very nice case, and suffered some brain damage as a result. And his partner, again, sad, his daughter was suffering from quite a rare illness where they could only get treatment in America, and he needed money to pay for the hospital bills. So, circumstances, but that's often where you find the best deals. This was purchased again with a joint venture partner, but look at that cash flow. After all costs, over 6 figures per annum for not putting any money into the deal. Now, it's not straightforward as that. Don't again give the impression it is, because it's nowhere near that straightforward. But how many of those do you need? With a bit of guidance, you could potentially do one of these yourselves. I'm not going to recommend it if you're a brand new investor, okay? But it is possible. Manchester, from the receivers. So I've given you a different source of finding the deal each time. Receivers of stroke administrators means the same thing. Now, dealing with receivers or administrators is not easy for a new investor. They tend to approach experienced investors, and in this instance, is a 14-bed HMO. Again, this is a one of ours, or used to be one of ours. Why? Because 14-bed HMO is not something you can stick in the estate agent's window, because estate agents don't know how to sell them. So this was brought to us again by somebody we know. Said, look, I've noticed this one. Are you interested? I said, yeah. Okay, let's have a look. You can see the figures. We owned it, I think, for about 4 years. As you can see, sold it for 620. But look at the cash flow in the meantime. Nearly £3,500 per month from one property, just one property. How many of those do you need? And this one you could do as a new investor, but take a little bit of work on it. But yeah, it's something you could do. So these deals are out there. But I've shown you there, apart from one on the estate agent, all the other ones were essentially what you consider to be off market. This one. Now this one is this was with an agent, but not on the residential side. So most people look on Rightmove or Zoopla. This was on Rightmove, but it was on the commercial side of Rightmove. So it was on the market for an amazing £50,000. Now, I know where this is. This was roughly 6 miles from where I lived. It's an acre of land in Farnham, Surrey. So if you don't know Surrey, it's expensive. All of Surrey is expensive. An acre of land on the market for 50,000. And what does that tell you? Well, okay, it looks a bit wooded, and it was. Not anymore. But £50,000 price tells you there's something wrong, doesn't it? for a plot of land, an acre, even just farmland an acre of farmland in Farnham would be worth more than 50 grand. So I had issues. And that really is what creates the opportunity. It's understanding how to deal with those issues is what creates the opportunity. And look at the end result. The end result, a £320,000 profit. Took 12 months to do that. Could you wait 12 months to make 320,000? Only you can answer that. This is one of the commercial deals I mentioned from one of my mentees, Ben. Now, Ben lives in Manchester, but he bought this. This is in Basingstoke, was in Hampshire. So if you can think about that, there's about a 250, 300 mile distance between him and the property. He followed the techniques we showed him to find these. It's what's called a sale and rent back opportunity. Which is illegal in the residential market, but not in the commercial market. So what is a sale and rent back? So essentially, if you've got a company that owns their own premises and needs to raise capital, one of the cheapest ways for them to do that is to sell the property they're in. But their fear, of course, is they're going to get kicked out. So what you do is agree a sale and a rent back to them. And the rent back to them is obviously got to be on favourable terms for you as well. They will want to stay there. So they want security and longevity. So they'll agree to a long-term lease, usually between 10 and 20 years. You can see the figures on this one, but bought it for 280. The value is 380. Now, the way commercial premises are valued is totally different to the way residential properties are valued. Residential property is very much by market demand. And commercial property is to some degree, but commercial property is valued mostly by the value of the tenant that's in there. Okay, so there's a good business in there, a 5-star rated business is in there, blue chip, good credit. That will command a higher price for that building than a 1-star or poor credit company. Okay, so commercial. That's why I say you can make capital sums with commercial property, as Ben has done here, roughly £100,000 profit. But all he did was got the lease signed for 15 years. That's how he made £100,000. It's the knowledge there. Look at his cash flow though, £1,250 a month. Now this is really passive. He's making £15,000 per annum from one property, and he's not got a bean to do with that property now for the next 15 years. Amazing, and only £14,000 cash left in. So looking at those figures, what's that? That's 100% return per annum. Amazing, absolutely, really, really good deal. And I was so annoyed about this because Basingstoke, from where I live now, is a little bit further, but at the time he did this deal, I lived literally 7 miles from this. I was so annoyed I hadn't spotted it myself. Just shows what a good teacher I am, I suppose. Anyway, and this is our most recent opportunity. You can see there, purchase price of the land, 0. Now this is one of our land assembly deals. We've agreed an option. So an option contract to be valid needs to have £1. Any property transaction must have monetary consideration, but it doesn't have to be much. As little as £1 is enough. You can see we spent £15,000 on planning, architects, legal fees. Now I can tell you the sale to the developer has now been agreed at £835,000. So our profit on that is £300,000. That took 15 months to achieve. Now how's about that for a deal? Now, if you didn't have an awful lot of cash, would you need it? If you want some help on doing this particular deal, you'd need to find somebody that had at least 15k. If they understood how you'd put the deal together and the figures to see that you were potentially going to make £260,000 to £300,000, I think you'd find the 15k. Hi, Kathy. You've said you've had several people wanting to JV with you because you've got some capital. What do you think? I'd prefer to do it myself. Hey, entirely up to you, Kathy. If you're the one with the capital, then the choice is yours. Investors are always looking for capital. we always look for investors with capital, because a lot of the deals we work on, trying to get the capital together is not something we can just provide on our own. So we often look to work with investors. Can be many benefits. It's up to you to sort out what benefit there is to you by doing it. If you've got money lying around just doing nothing, then maybe consider it. How do you find out about receiver deals? That's really something you've got to work out. Okay, receivers, one, you've got to make contact with them, you've got to establish a relationship, and you've got to be able to prove you can do what you say you're going to do. Because if you say you want that property from them, let's say there's like that Manchester HMO I showed you, you say that you want that property, they're going to immediately ask you for some money straight away. They'll ask you to sign a contract, which is a non-get-out contract. So this is before you've exchanged on the property. All right, so it's a non-returnable money contract where you have to put some money down as your proof you're going to do this. And if you don't, you lose your money. Okay, so that's the hard side of dealing with receivers. That's why I said it's, for the new investor, a little bit difficult. More experienced ones, you know what you're doing. You know the property you're buying. You know what you can get out of it. So putting the money down to secure the deal is not so much a problem. But that's what a receiver will do. They'll actually say, right, okay, here's a contract, pre-contract contract. You've got to sign this. We want 35, 40,000, or 50,000 pounds off you now for us to stop trying to sell it, so that we know you're serious. Okay. Hopefully that answers your question there. So just going back to this one here. A good deal. When we show you how to do these don't come around every day. All right, all the deals I've shown you, they are out there, but you've got to find them. You just stick, you can stick with the estate agents one, just to use that as your main focus. But you see here a multitude of ways of finding deals. This particular one, the land, was a totally off-market one. We found ourselves through software that we use. Okay, so what's stopping you? All these things here. You're on this webinar tonight. Some of you are new, some of you may have a couple of properties, but what's stopping you moving forward? Is it not knowing what or where to buy? Now, we can show you the what, but where to buy is up to you. You need to do the research in the area. I don't know every single area in the country. I can show you the tools that we use and show you how to assess an area, but then you have to make the decision. Unsure if the numbers add up. Well, that's again something we can help you with. Understanding numbers is quite key to investing. Okay, whatever investing you want to do, whether it's shares, foreign exchange, whatever, property, gold, you need to understand the numbers. You need to understand the returns. So that's something we cover quite intensively with you. Afraid of not being able to rent out the property. Strangely enough, when we first started, this was me. I thought, what if we don't rent out the property? As stupid as it may sound, right? But I'm thinking, oh, okay. And the very first property we bought, great. I'm one of those kind of, I'm a kind of deal getter. Okay, I like getting deals. So we got the deal, got it over the line, all completed, and then we started the refurb. And like a month later, I'm thinking, well, when's the refurb going to be done? We need to get tenants in here, because we're just spending money here. We're now paying the mortgage, of course, as well. So we've got money going out, mortgage, insurance, all the refurb money. And I'm thinking, crikey, when on earth is this going to end? So I think the refurb was quite an extensive refurb. It took about 3 months to get the refurb done. It was a complete gut of the house. But literally within a week, the house was rented. And after that, we bought, I think it was 14 or 15 properties in our first year of investing, once we'd seen the system work and gone through it. So, but don't take renting for granted. All right, I've seen many investors buy properties in the wrong areas and they haven't rented out. All right, so this is again still down to research, right? Making sure you buy in the right areas. Are you concerned about the management of the property? Well, I said earlier, there are people who do this really, really well. They're called letting agents. All right, my suggestion is that's what you use. Worried about mortgage rates. Mortgage rates are historically at the lowest they have ever been. You can, if you buy properties in your own name, the rates are pretty cheap. In a limited company name, they're still pretty cheap. But guess what? They're going to go up at some point. And we don't know what the net effect of Brexit is going to be yet. You know, we're supposed to be going out on the 31st this month. Clearly, that's just a political thing. The actual effect of leaving the EU is not going to become apparent for a year or so, I think. So mortgage rates, I think, at some point are going to have to go up. But will they ever go back to the heights that I remember? Remember, 17%? Never. You know, the average rate of mortgage rate for buy-to-let mortgages since they first came out is 5%. So could they go to 5%? Possibly, but I think it could take quite a long time. What you need to accept is that we are now in a low interest rate economy, and we have been for 10 years. Any minor increase in interest rates, so the controlling the monetary policy, any minor increase in interest rates will have quite a dramatic effect on the whole economy. And what the government can't afford is for the property market to slow down too much, because the property market, if the property market is growing, the economy is growing because it produces a lot of industry. There's a lot of work, industries associated with the property market that keeps everything else going. So they can't afford for rates to go too high. So, but bear that in mind, rates have got to go up, and you should stress test your portfolio. So what do I mean by that? When you're buying a property, you don't use the mortgage rate that you're quoted. You use a higher one. And I use 5%. Some people use 6 or 7. So I always work my figures out on at least 5 or 6%. If it stacks up at that, then yes, it's a deal worth considering. Scared of possible major repair costs? Well, you shouldn't be. When you buy the property, if you refurb the property, which is obviously the best time to do it, you shouldn't have any major repair costs. But you shouldn't be scared of any repair costs anyway, regardless of what they are. If you find a property that has subsidence, that will frighten a lot of people and a lot of amateur investors, but it shouldn't. Right? A builder will tell you all of these problems with properties are fixable. Okay, just the cost, that's all. But if there's a high cost, guess what? That means you negotiate more on the price. And put off by complications and costs around tax. Just understand this, guys. If you happen to pay tax, you're making money. Just accept it. So, finding your reason. I think, as I said at the beginning, one of the most important slides, really, and most important things. What does financial freedom mean to you? Because you can become financially free through investing in property, and you can do through other means too. Property is just one product that you could use to become financially free. Personally, I think one of the best ones because you have a solid asset behind it. But what does it mean to you? What is financial freedom? I'll give you my definition. Right, my definition of financial freedom is this. It's having enough income coming through from alternative sources, so not from your job, from alternative sources that covers your expenses. That is financial freedom. That means you don't need to work again. You have a choice. Do you continue working and have the income coming through from your portfolio, build that up, or you decide not to work anymore, or do you decide to work part-time anymore, reduce your hours, whatever it might be? Your choice. What would you do with your newfound freedom? It's quite interesting as a property investor. What do you do with your time? Because I often get asked this, right? And there are only so many deals you can work on at one time. I'm fortunate. I have 3 main property companies. So we've also got the training company. We've got our own portfolio, which we manage, and within that we have developments and stuff that we're working on. And I also have a European-based investment fund and crowdfunding platform. So those kind of things keep me busy. But if it was just property investing on its own, I would be twiddling my fingers, thinking, what else can I do? Because I'm that kind of person. You might not be. You might be the kind of person that wants to go and spend it all on the golf course, spend more time on the golf course, or traveling around. Property can give you the freedom to do that. And what would your perfect day look like? Mine is a busy day. I like to keep busy. I don't like to be idle. I like to always find things to do, even if it's sitting down reading a book, all right, or playing a good game of chess. Because I'm one of those kind of people that I love strategic games. So playing a good game of chess or something like that, whatever it might be, right? What is your perfect day going to look like, and what drives you forward? This is really important, guys. got to have something that's going to drive you forward, because if you don't, and the slightest hiccup comes along, you're going to fall by the wayside, and that would be a shame. You've got to find something to drive you forward. Could be family, could be children, could be some altruistic motive. One guy attended our 2-day, was a vicar, and he was looking to invest in property because he had some money, so he could actually build a church. I thought that was very admirable. You don't have to do that. Can do, don't have to do that. We've got one of our mentees who spends money. He's just been out to Kenya. He's helping to build a school out there. So, whatever drives you forward, find a reason, because that reason will help you make the money to achieve it. So what holds you back? What is stopping you from actually pushing forward? So, how can we help you? How can Property Master Academy help you? Well, let me share with you some of the people we've worked with. Viv and Ray Mitchell. Now, as you see, slightly older couple, very similar age to myself, actually. So no comments on the age there. Viv and Ray, now they're both South African. Ray was a pastor, so he had his own church in South Africa. Viv had a very small lettings agency in the UK, and they were childhood sweethearts. Actually, they met again online. Ray's moved to the UK now a few years ago, and we're on our mentorship program in 2014. They could not get mortgages. Right? They were heavily in debt, had no idea how they're going to make this work. Within the first 4 months, they had 4 properties producing something like £3,000 net cash flow per month. At the end of the first year, as you can see there, achieving over £12,000 net cash flow per month at the end of the first year, and gone on leaps and bounds from there. They are based in the south, right? So a lot of people reckon that investing doesn't work so well in the south. Some things, they made it work, and they won an investor award in 2014 as a result. Giuseppe is interesting character. He was an international project manager with Shell. He is Italian, but he lives in the UK, in Bristol, with his wife, Gilly. And when he came to us, he was extremely skeptical. Had a little bit of money, not much. I think it was about £50,000 or £60,000, enough to get him started. But he was very skeptical about how things could work. But look what he managed. 7 properties producing an income of over £55,600 per month in his first year. Now, he was a very busy chap because he was in and out of the country. He did this on 10 hours a week. So if you think, well, this all looks fine, but I haven't got any time. Well, if you can't find 10 hours a week to do this, then yes, you are wasting your time, all right, on this webinar. But that's how he did it. Why? Very systemized, very pragmatic in his approach, very disciplined. It's very disciplined to the time he's going to spend. That £5,600 per month enabled his wife, Gilly, to give up work as a school teacher. As of 2 years ago, Giuseppe left a high-paid job at Shell. He's a full-time investor. He now has 28 properties. So you do the maths on that. And he won an award in 2015 for that commitment. Simon, no previous experience whatsoever. He was a music writer, still is a music writer, wrote some music for some well-known artists, and had a change. Some things happened in 2015. One of his major clients died, and decided to take stock of where he was at. And he's always been interested in property. He had a number of books on architecture at his house, loads of them, absolutely loads of them, and decided that perhaps property investing was the way to go. Didn't want to get involved with buying properties for rent at all. His very first deal was a development. So as I was saying earlier, you can, as a new investor, do a development. Well, that's exactly what Simon did. And he made £250,000 in his first development deal after 18 months. He now has deals in his pipeline approaching £10 million. Mithila and Mahmood, probably our youngest couple. They've now got a son, Micah, and they were on the program a couple of years ago now. Their very first deal, £1 million semi-commercial renovation. So what does that mean? Essentially, you've got a building with a shop on the ground floor and residential buildings above. In this instance, the shop on the ground floor is a wine bar, which they have a 15-year lease on. So that means they've got guaranteed income for the next 15 years. And then the 2 flats above, they converted to HMOs. Now, if they decide to sell this particular property, which is in Surrey, by the way, they would have made £300,000 in their first year. They've actually kept it and have built onto the portfolio since then. So a few others. Martin was on the mentorship program just over a year ago. Just finished the mentorship, which say a big thank you to all my mentors, Jackie, Peter, and Mark. Their helping experience allowed me to start joint ventures with others with development and buying HMOs. So it really does work. Truly can say I couldn't have done it without this mentorship program. Thanks again, Martin. Now, Martin had no previous experience. He'd been made redundant from IBM. He's actually an IT background. Bought his first property within 2 months that makes him £1,600 a month. And now, just over 2 years on, I think it is now, yeah, around about 2 years, he's got deals in the pipeline with an estimated profit of just over £500,000. Edgar's probably our youngest mentee ever. He was 19 when he joined us. Very motivated guy. Obviously, there's a lot of things he couldn't do because of his age, didn't qualify for mortgages and all that kind of stuff. But there's a number of things he could do and has done, and he still works with us. We've actually offered him a role with us, and he works, apart from running the role with us, he also works now within the property industry as his job. He was previously a manager for McDonald's. Jeanette's goal when she joined our mentorship program was to make £1 million in a year. And she didn't quite do it, but she made £990,000 instead. Very motivated lady. If you do come and work with us, you'll get to meet all of these people. Roger was a farmer. Got sick and tired of being up at 4 o'clock in the morning to plough the fields for potatoes, I think was his main crop from recollection. Now he's the guy I just mentioned, who's actually out in Kenya helping with the school there. But yeah, amazing guy, absolutely amazing. Or they all are, to be honest with you. And these are all very recent ones that we've worked with. So, opportunity. Let us help you grow your property business to 6 figures, or from 6 to 7 or 8 figures. Why do we offer that? Because we've done that. But do you qualify? Kind of people we're looking to work with. Commit 1 to 3 hours per day. As I said, Giuseppe did it on 10 hours a week. All right, so that's kind of the minimum kind of standard. Clearly, ideally, you need to put in more. All right, but if you can get those number of hours together, you can make it work. Can you be fully focused on that time? Just exactly like Giuseppe was. Disciplined, 100% commitment. Are you coachable? In other words, can you do as you're told? I know this might sound a bit glib, but you know, coaching, learning from other more experienced people is about listening. You know, when you went to school, you went to learn to listen from somebody that knew what they were talking about. Same principles here. Only here we're talking about making money, and potentially, if you get it wrong, losing money. So you need to listen to people that know what they're talking about and have a strong why. The best way I can describe this, okay, if any of you have children, the question I'd ask you is this: would you do anything for your children? I know the answer would be yes. It's that kind of why, it's that kind of reason that you need to adopt to do property, to be successful. And are you open-minded? Now, I don't care how much property knowledge you have so far, but if you come and work with us, you come on our 2-day, come with an open mind, come and see what other things you can actually learn. You'll be amazed. And do you have money to invest? As I said to you right at the very beginning, I'm not going to lie, you need money. If you haven't got money, do you have access to money? Okay, it's key to property investing. Even if you do some of the controlling strategies where you're not actually buying the property, you're still going to need some money. Okay, so make sure that's the case. So we run a property investing masterclass. Next one's on the 7th and 8th of February, which is at the Marriott Hotel in London, and just for a ridiculous price of £147 plus VAT, includes the parking, lunch, refreshments. You get a nice 3-course lunch, get refreshments, and nibbles throughout the day. So as you can tell from that price, we don't make any money on that. If you want to come along, love to see you. But that's that. Let me just continue. So what do we cover? So these are things we cover. Mindset of a business owner, because really what we're talking about here is treating this as a business, not a hobby. The investor or landlord thing, which are you? Tenant, or as we refer to them, customers. So if you're running a business, you have customers, don't you? You don't have tenants. Obviously, we talk about buy-to-let, HMOs, rent-to-rent, lease options, commercial property, deal sourcing, buy-to-sell, leasehold, freehold, title splitting, short leases, trading, development, land assembly, and finding motivated sellers. You only ever want to buy from a motivated seller. Why? Because that's when you get the best deals. Simple as that. And a lot more. It's an intensive 2 days. We cover an awful lot of material, and yes, there's a lot of stuff there too. This won't be in depth. Okay, so this is a kind of an introduction to property investing. So we give you a basic amount of information on each strategy to help you in your decision as to which kind of strategies you want to follow and learn more about. So if all you did was one thing, what would it be? You've listened to me now for just over an hour, and we're coming to the end now. We normally make sure we're well within just over an hour's webinar. So what would you do? It's probably 2 things. Stay where you are, make a change. If you stay where you are, well, I wish you all the best. But if you want to make a change, do so. Come and work with us. Come on to our 2-day and learn some stuff. Get out there and do it. We're at such a unique point in time now with Brexit, something called the Section 24 legislation, which is affecting a lot of landlords. So the opportunities this year are going to be absolutely amazing, and it will not happen again. The time to be in the market is right now. I cannot overemphasize that. Or are you the kind of person who's attracted to shiny things? You're just looking for that next opportunity, but it just never actually works. Or what happens if it goes wrong? Doubts or fears are just based on a lack of knowledge and information, and not having the right team of advisors upon whom you can actually rely and trust. That's all. If you've got the right knowledge, the right information, the right team you're working with, things shouldn't go wrong. No one can ever guarantee they won't go wrong. They shouldn't go wrong. Do not wait. The time will never be just right. The time to do it, guys, is now. If it's now for you, and I hope it is, then come and join us on the 7th and 8th of February at the Marriott Hotel, £147 plus VAT. If you want to book, there's the link there. Okay, I will add that into the chat box wherever we are. Boom, boom, boom. Let's just get this out. So before I'm trying to type that out, let's just look at some of the questions as well. So if you've got any more questions, by all means put them into the chat box, and I'll start to answer them in just one second. Just type that in. Okay, I've just posted the. Oh no, it's not right. Check that a second. Yeah, sorry, just typed the wrong URL there. That won't work. It's got a question mark in it. Hit the wrong button. Oh, that's it. There you go. Okay, so right, just go back to some of the questions here. Kathy, what about things like Japanese knotweed? To be honest with Japanese knotweed, yeah, it is a problem, Kathy, and there are certain areas of the country that it's more prevalent, but it can be dealt with. Right, there are treatments for Japanese knotweed which come with warranties attached to them. So if you find a property with Japanese knotweed, if you're brand new, I would leave it. Okay, once you become more experienced, then yes, it's something you could perhaps take on, because Japanese knotweed can be dealt with. There are companies that deal with it now, so it's a recognised treatment method that's accepted by lenders. So yes, it can be dealt with. Becca, what software do you use? Oh, there's quite a lot of different softwares out there for finding land opportunities. So the three main ones are ProMap, Nimbus, and Land Insight. They all cost money to get. They're a cloud tool, so it's not something you download to your laptop or PC. But yeah, they're the main tools, and it's just understanding how to use them. Some of them are not so straightforward. So we run a training just on actually using the software, because they're designed for architects. All right, so they're not that simple to use, but once you get your head around it, that's when you can start to find opportunities. Okay. Let's see if there's any other questions. Okay, I think that might be about it. Yes, Peter will be at the masterclass, Kathy. So yeah, so it'll be myself, Jackie, Peter. We're both there for the 2 days. You'll also get to meet a few of the people I've actually mentioned in the webinar here. I think Martin will be there. Martin Littleboy should be there. Giuseppe will be there as well. So you get a chance to have a chat with us. You ask. It's very interactive 2 days. We don't have a lot of people there. The most we have is 20 people. So it gives you a chance to ask questions. Because I hate, one thing I used to really hate was going to a seminar or a training course and asking questions and nobody answers the bloody things. So it gives you a good chance to ask questions, bearing in mind we've got a lot of material to get through in 2 days, but that's really it. And we like small groups. We find it's much less informal, and as I said, you get actually a chance to actually ask questions and get answers too. Okay, any more questions before we wrap up for the night? Okay, well, if not, thanks for hanging on. An hour and a quarter, so I haven't done too bad. I've obviously overrun a little bit there. If you're going to come on the 2-day, you won't regret it. It's probably one of the best courses we've ever run. There's no hype. There's none of this, what I call happy clappy high fives every 2 seconds. Not into that at all. You want straight talking, straight answers. That's where it'll be. Okay. I hopefully you've gathered that from the way I've spoken this evening. But anyway, who's that? Hannah? Oh, no worries, Hannah. Hope you enjoyed it. I think it's probably similar to what you heard at the business show, I think, when you were there. Maybe slightly different. No worries, Kathy. Hopefully you can join us too, and yourself, Becca, and the others that's still listening in. Who have we got here? Yeah. Oh, no worries, Darren. You managed to make it in the end. I thought you were thought something else had cropped up, but anyway, good. Hopefully you got some information there. Okay, excellent. So the rest of you, Angela, Anshu, Chris, Darren, Hannah, Lorna, Moss, Nicholas, Sade, Solar, Stanley, Vince, etc., etc. Hope you can make it. But if not, I hope you learned some stuff this evening. And all the best with your property investing. We'll probably run another one of these, I'm sure, in a few months' time. So from me, it's good night and enjoy the rest of your evening. Thanks very much. Cheers. Bye.